So, and our next speaker, one of the two speakers who's actually from Hamburg, so we have some local heroes here, Moritz Schildt. He's has an investment background, kind of classical investments, but now going more and more into crypto. And he speaks about strategies for crypto portfolio composing. Hello, Moritz. Hey, give a big applause for Moritz. Stage is yours.
Great. Good morning, everybody. Yeah, I'm very happy to have you all here because that's my hometown, and Hamburg is more and more developing to set up a blockchain community, and you are part of it because this conference helps us pretty much. Second, I'm very happy that I'm here because I'm a lawyer by education, and typically lawyers are very, very skeptical about blockchain and crypto, and therefore it's good to have the two worlds meet here. Aaron mentioned briefly my background is I've spent most of my professional life in financial services. I'm a founder and managing partner of a asset management firm. We focus on advising institutional clients, so insurance companies, banks, family offices, on investing particularly in their fixed income space. So all this boring part of the balance sheets where you get something between 1% and 2% per year. And maybe that's the reason why we are keen on learning a little bit about Bitcoin. I bought my first Bitcoin in 2013, and since then have been pretty much attracted by this topic. If you work with institutional investors in Germany, you have to be a little bit old school. Therefore, I have an agenda. So the next 15 minutes, I'll try to walk you through these topics. Crypto as an asset class, look a little bit into the valuation for mature crypto, if you can call it mature, walk into the ICO space, and then share with you some thoughts on building a portfolio. First of all, when you talk to professional institutional investors, they'll always have some brackets, they have some asset classes, and when you approach them or they approach you and saying, have you heard of crypto as something you can invest in and you can get returns of, they'll ask you, so which asset class does it fit in? And this is the kind of traditional view. And initially, people thought, well, we have always had this class of alternative assets, and that's something else, and crypto is something else, and so let's put that there. The next step was that people said, well, but I mean, crypto is just so broad. You have so many different. I mean, it's no more only Bitcoin. There are so many opportunities to spend money in smart ways, even spending in the Bitcoin or something like that. That maybe we should look at crypto asset as an asset class of their own. And when you look at the other classes and say, well, some of them are less volatile and others are a little bit more risky and they're more or less correlated, you might even come to a point where you say, well, maybe all this crypto is just a new category. It's just a new dimension, a new layer of that, and that's actually the view I like the most, to say everything we have seen so far and we will find in the portfolios of institutional investors is the kind of securities and the physical asset area, and what we will see in the next years to come is a new class of assets, that's digital assets, and yesterday we heard about digital art as a potential new asset class. And don't ask me how these coins and these classes will be named. I just put some names there to give you a flavor. But I believe that at some point in time we will get to something like that. So how do institutional professional investors look at it? So they first of all are pretty much attracted by performance, and if they compare what you can get out of just a Bitcoin investment, everyone in the room knows about it. The second thing that is interesting is when we apply the kind of traditional measurements on crypto, we realize that yes, of course, so it's only first quarter of 2018, that return is enormous compared to other classes, and we have taken here Bitcoin, and the CCI 30 is an index of the 30 largest cryptocurrencies. And then we look at volatilities, and we realize that crypto is tenfold what we can see in the equities market. And then we usually move further to the so-called Sharpe ratio, which is the kind of risk, so taking out the risks, the return without taking risk into consideration. And even then, we have a Sharpe ratio of 13, which is way ahead of everything. So it's a pretty difficult asset class from a kind of someone who wants to step into that. Nonetheless, what everybody likes, because if you build a portfolio, you always look on the correlation between your different assets. And what you like, because you like diversity, is if you find a new asset class that is not correlated. And as you can see here, and that holds true for most other asset classes, because interest rates have no impact on the price of Bitcoin or crypto, and currencies have no direct impact on that. And that's definitely what investors like, and as we try to have Nobel Prize winners here today cited, so diversification is the only free lunch in finance. Everybody wants to have diversification, and that might be a good reason for many institutional investors to just step into this space. And we even have few very conservative regional banks where the guy responsible for treasury is telling us, well, my board doesn't know what crypto is, but I think at some point in time we have to put it in our own portfolio, because our own portfolio needs to be diversified, and this is something we want to have. So this as a short introduction. People then always tend to say, so what's the right price for crypto? Because they are used to do that for equities, and they say, okay, currently a share is X, and we believe that the fair price is Y, and if Y is bigger than X, then we buy it, and so on. And actually, I think we have to be aware that the classical approaches for valuing crypto are not applicable at all. So if you do discounted cash flow, this doesn't hold true. And you see some new crypto coming up that is telling you that there will be some return on. However, please bear in mind, if you want to value a share of Adidas, when people look at the euro cash flows and they look at the euro dividends, and there's no crypto yet that will pay dividends in euro, because that's not part of the system. And I think that's the kind of first point where we really have to say it's not applicable. And price earnings ratio, all that doesn't make sense. And I think most people are aware of that. And there are some other aspects we have to bear in mind when we try to look at crypto from the traditional investor's view. So first of all, in most assets that are available in this world, you can go long or you can go short. So you have so many instruments that give you the opportunity to shorten that, to bet on prices to go down. In crypto, yes, I mean, the Chicago permits futures on Bitcoin and a few currencies. Anybody has bought or sold futures on currency? Okay. So from my point of view, we belong to a very small group of German asset managers that are admitted as a CTA to the CFTC, so we could trade for clients. However, currently, the margin requirements for futures is 100%, so you have no kind of implied leverage, so no kind of positive aspect. Second thing, currently, derivative instruments is close to zero. Something that pretty much drives most of the equity markets in this world is that people don't buy the stocks directly, but they buy something that is derived from it. Leverage is pretty difficult, which to some extent might be good. People tend to say if leverage is easily accessible, then it drives volatility. Crypto, even if you buy it without leverage is highly volatile. So maybe that has an aspect. We see that in the traditional markets, there are mainly huge banks, investors, insurance companies that have large holdings. They tend to behave rational. In crypto, I believe that there are a few whales where it's really difficult to guess if their behaviors are likely to be rational. Market volume is tiny. It's a global thing. Most stock markets are still mostly driven by regional aspect. We currently have no real source of market information. That's something that you have no Bloomberg where everybody says if something is on Bloomberg, then it appears to be true. And certainly manipulation is not really illegal. And I think you see a lot of people trying to manipulate crypto market, which might be good. There are some theses on the value of insider trading. Don't know, but I think this is something we have to bear in mind. And then let's just move forward through the different concepts briefly. There are people that try to apply the equation of value money that we used to have if we have traditional currencies. I think it's not applicable because this is not the single one money for a region. Then there are lots of things that are applied, and people tend to say that the price of electricity has an impact on currency values. I'm not so much into it. I found this early in 2016, and that's for me the most valuable approach to what is the likely future value of crypto. Let's just say it's driven by supply and demand, and even though we will have new cryptos, supply is somehow restricted, and demand is likely to really grow. And if we take some comparables, for example, so that's end of 2017, but this is the total value of crypto. The golden one, and each of these is 100 billion US, is Bitcoin, and then the black one is all other crypto, and the blue one is Ether. Compared to gold, and I mean, gold is something that investors tend to have to diversify their portfolios, and then try to compare it to the entire stock markets. And then you realize it's so small. It's a nice page, by the way, the Money Project, and they do all these comparisons. And then eventually I had to put a little bit smaller. If you compare it to the global money supply in this world, and you just assume that maybe 15% of it will at some point in time be the value that lies in crypto, then price for Bitcoin, they make a mistake because they just project it on Bitcoin. And when people ask me, so what do you think will be the value of Bitcoin? I tend to say, I don't know, because I don't know what will be the future percentage of Bitcoin in the entire crypto. And I think we will see lots of replacements within the crypto world. So it's always good to be diversified, to have a huge portfolio. I always look at the total potential valuation of the entire crypto market. Let's move on with respect to time. It's interesting to look at the M1 money supply of different countries. And so currently the total crypto market cap is somewhere in the money supply of the Netherlands. So that gives room for improvement. Just briefly on valuation for ICOs. I think everybody's aware of that many people look at hype and scam and moonability. That's cool. For our institutional investors, that's definitely not what they're looking for. They look at utility, scarcity. These are the aspects. And then what we like when we look at new projects, we like transparency. We want to know who is doing it, who has financed it, what are you going to do with that, who is really on the team and who is only an advisor. Yes, we are conservative, so we like to have corporate governance and a legal structure. We want to see is it delimited and where is it located and who is on the board and when has it been founded. We want to know quite an idea of what's going to be the use of proceeds. The token economics is something where we feel that many projects have not done their calculations about it. And okay, I'm a lawyer from my background, but we appreciate KYC not for us, because we see a significant risk for the people that do the ICO, that they run into difficulties, and our money will be gone if they do. Discounts. Well, people tend to say if there's someone who bought the same asset 25% lower than I do, is that fair? Maybe this is an indication of high volatility that's already priced in. So tentatively, we are much more into this is one single price, and we will apply it for every investor. Bounty sounds great. Sometimes we feel if 25% of the entire ICO goes into some bounty, we feel that some pyramid sales organization, and we get our hands out of it. And just briefly, my time is over. We like to have a portfolio of crypto. We currently go into it, and we realize that some crypto is much more volatile than, for example, the Bitcoin as the kind of first thing of it. We do some statistics. The golden one is Bitcoin, and we see that everything else has a significantly higher volatility. And when we run through it, we try, and that's what we currently work on for our institutional investor base, to build a portfolio that has a volatility reduced. So we look at the kind of internal correlations between the different currencies, and then we build a portfolio with, here you see a sample with some 20 currencies out of the top 50, and the composition results in a significantly lower volatility of the entire portfolio than if you had a kind of allocation to each one. Thank you very much.
Thank you so much. Wow. Right. Very impressed. Thank you.
Thank you.
I think we have some questions, right? Was there a hand sign? No. Yes. Michael. From hamburger to hamburger.
Yeah, hi. Yeah, my question is, don't you also include geopolitical crises or potential geopolitical crisis into your expectation of the future development of the Bitcoin course? Because if I remember back when there was the Cyprus crisis in, I think, 2012 or 13 with the bail-in, Bitcoin wallets were the most demanded apps, yeah, for mobile phones. And how do you see that?
I think that's definitely a driver. All kind of crisis in the traditional markets will be a significant driver for demand and for crypto prices, definitely. However, it's pretty difficult to predict that, and it's pretty difficult to speculate on that. But I think, and we have seen that in the past. The more people get concerned about the traditional markets, the more they are open about crypto. Yeah.
More questions? Yes, please.
At what stage are you investing in the ICOs? I mean, are you investing in the private, the pre, or are you waiting for it to start trading?
We're currently looking into all opportunities because our investors are interested in seeing that. We set up coinIX, it's a investment vehicle essentially built for a family office, and we discuss with our investors all options, so we have no restrictions currently. To be frank, we look into many ICO projects. We like many of them. However, we have not invested so much yet because in many cases we felt like, okay, let's just put a toe into the water, but let's see how the first 12 months are going to evolve.
Please. You get the mic.
Hi there. Great talk. From another hamburger to hamburger. Now that we had Hayek or his thesis, how far have you developed into recommending to your clients to invest at least in gold or make it like a valuable part of the portfolio as a first step, maybe going from gold then to crypto, the size of shares?
So we, as a company, don't advise on gold. We do only fixed income. I think one has to be aware that the banks and insurance companies have 90% of their portfolios in this fixed income class, and then they want to have some additional things. So I personally, I'm not into gold, definitely not, because I think it's pretty difficult and it has no value attached. It does not generate any returns, and I can't really see why there's an increasing demand. So compared to crypto, I would always prefer crypto to gold if you want to diversify your portfolio. But that's it's not an investment advice, but it's my personal view on that.
Amazing. Yeah, thank you so much. We'll see Moritz later on our jury panel, because we'll have an ICO pitch session later. So if you're more interested in ICOs, just after the break. Thank you so much.
Thanks, Aaron. Thank you all.
Applause for Moritz.